Hey, greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Thursday night, January 22nd, 2026. Sorry, this is a little late. We are now addicted to Landman. We're probably the last people in America to realize it exists, and my wife and I watched a couple episodes tonight before I did this. Um, for those who don't know me very well, I am sometimes accused of being a perma-bull. I don't think I am a permabull, and so if I have a negative title, that probably is more meaningful than the person that says the sky is falling all the time. I titled tonight, Are U.S. Equity Markets About to Roll Over? And why I bought some puts today. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group Top Down Trader, and websites marketmripro.com. Thanks for taking a look at my video. If you're new to my channel, go ahead and hit the subscribe button. You can always unsubscribe. Hit the alarm, you'll get notified when I do this. And even better, think about joining my Google group, which is free. All right, I do these videos for education only. If I talk about specific stocks or other instruments, it's in the spirit of education. It should never be considered investment advice. I do these videos to demonstrate how to use the tools that I have and others have for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I can own, intend to buy, sell, do anything with any stock I mention in this report. I'm not warranting to you that I'm not going to go in and buy it and then tell you that I like it. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I've got tools in multiple platforms. I'm really happy with what's going on with the Metastock rollout. I've got my freestanding app. I have tools within TradeStation, TradingView, and Wealth Charts. Doesn't matter which platform you're using, the tools are the same. There's important differences. For example, Metastock has some integration with trend lines, which I don't have in the other programs from a scanning perspective. Metastock has access to international data, and Metastock is fully streaming. TradeStation is the place where I'm able to marry my stuff with Sagar stuff, but it requires you owning both of our tool sets. We got some unique ways of working together. Wealth charts with Rob Hoffman's platform. Trading views indicators. So I've got a number of things, and I communicate mostly through the Top Down Trader Google group. So I invite you to join. It's free. You sign into Google Groups, you click all groups, you look for Top Down Trader, and then let us know how you want us to contact you. You can control when you come, you can control when you leave. If you don't find value, then you disappear. And frankly, I use it to give discounts, to do some private mentoring for free from time to time. And frankly, I let you know when I post things and what I think is going on in the market. News and earnings. Today we got a bunch of data. Didn't seem to do much to change the bullish enthusiasm, which led to the rally on Wednesday and Thursday once Trump backed down significantly on what he wants to do with Greenland. Tomorrow we have consumer sentiment. It's final value, so we've already seen preliminary. 54, hopefully we come in around where it's expected. If it came in significantly lower, it's looked at being negative about the economy. Hopefully we'll come in on target, and then we see some PMI. We had a lot of earnings tonight, and I think it's important to remember we are in the midst of earnings season. And next week is a massive, 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 massive earnings week. A lot of moves tonight. Intel's numbers didn't look that bad for this quarter, but they have a problem getting raw materials and getting the components, and they warned going forward they're down 10%. Alaska Airlines, the numbers didn't look bad, but they're down 2.3. LIF is up 15.9, SLM is up 6.7, and Intuitive Surgical had great earnings and guidance. They're up 2.5%. I guess it's just warning us that we're going to have volatility on the individual names based upon earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I am doing a free mentoring session January 31st. I've seen a lot of people sign up. Haven't filled up the room yet. Registration will be in the remarks section on YouTube and in the Top Down Trader email tonight. I'll include a registration link. You don't have to own my tools. You're not paying for it, and I'm not limiting access to people that own my tools. I love talking about trading. I love talking about things that I learned from smart people such as Ian Woodward, and I like to demonstrate how I do my trading. If you want to understand my performance, go on YouTube and look for the videos I did at the end of the year. Um, I am a staunch believer in the power of top-down investing, and I think it really gives you an edge, and I like teaching you what I do. So, and then I always, to keep people sticking around, the fan favorite is how I look at options and stock replacements, and I do that at the end in the last 30 to 40 minutes. So please join. It's free. Any information about my products and any of the platforms, about what I do, I answer my own emails, mark@mripro@gmail.com. If you need tech support on the program, we recently went from a app that was installed with a execution file to a Windows Store app. And the Windows Store app is great because it gives us a very simple way of pushing updates and controlling access. And it's great for you, the user, because your Windows ID gives you 10 installs of Windows Store apps. You can't be using them at the same time, but you could have them on multiple different computers at work, at home, if you're traveling, so that makes it easy for you. Haven't picked the date. I'll be getting together with my buddy John Person over the weekend, and hopefully we'll talk about when we might do a 2026 meeting. But I would anticipate that either we do them together or either concurrent or consecutively late October, early November in South Florida. More to follow on that. So I'm going to try and defend the title and also talk about why I started looking at puts today and just to protect myself. So it was another strong day. If you look at the equity markets, the Russell was up another 0.75, 0.73 on the Qs, 0.58 on the diamonds, and 0.52 on the spiders. If you look over here, they finished kind of, the Russell sold off some, finished at the bottom 20%. The Qs and the spiders kind of around the middle, and then the diamonds at the bottom third. So we didn't finish near the highs of the session. It's been a good week. The last 5 days, the Russell's been up 2.5%. Other things, the dollar gave back 0.44% on Thursday. Bitcoin was down 0.86. Bitcoin failed its rally. It's now down 8.6 in the last 5 days. And then the volatility continued to drop. Now that would go against my thought about buying puts. If we look at breadth, we massively blew out the number of new highs minus new lows at 52 weeks, and the NYSE and the NASDAQ both breaking above 200. Wow, I don't remember the last time one of them was above 200. But where do we see some cracks? If you look at 3 different indexes, we can look at sectors that were up today versus yesterday, so Thursday versus Wednesday, industry groups up versus the prior day, and on each of these 3 indexes, we underperformed compared to the prior day. And participation, we may have had a lot of new highs minus new lows, but only 56% of the S&P 1500 were up, 64 on the NASDAQ, as we did see big cap NASDAQ really rallying, and 58% of the NYSE. So good day for sure, but kind of middling on the advancers versus decliners, although I am impressed by the number of new highs versus new lows. If we look at the S&P 500 sectors, the two things up 1% were communication and discretionary, followed by technology and financial. And if we look at the laggards, it was sort of defensive things, real estate, utilities. Staples was the fourth from the bottom. Industrials was surprisingly down. I like looking at themes, and I see that silver, clean tech, gold, solar, cloud computing, biotech, renewable energies. Here's the performance for one day over here. Metals and mining, cannabis, telecommunications are all up 2%, and internet's just below 2%. So there were some really strong sectors today, or strong themes. On the other hand, what was weak was copper, aerospace, home construction, retail, blockchain, transports, things that have been up. So potentially more rotation, and perhaps we're now starting to sell some of those small cap stocks and moving back into the big cap tech. And that could be good or bad. But that's not why I started thinking about puts. Let's look at the timing model. If you follow me, you know that the daily model, which is scored on the bottom here, has been negative for the last several days. Now, this rally the last 2 days has been impressive. The spiders have pretty much just under where it closed the day before the big drop. The Qs are just below where it was before the big drop. The Russell's on fire, and part of my concerns, and the diamonds have recovered and traded up to their prior highs. So we have had a massive recovery. Notice we have not flipped the buy-sell signal. We could tomorrow with a strong day if we flip the bongos. On the weekly, we remain in a buy signal everywhere. So I can continue to say that we are in a uptrend, but we're pulling back, except for the Russell, which seems to be in rocket ship mode. And maybe it is rocket ships that are driving it. Now, I don't look much at the guppy charts unless we are in a period of market sell-off, and I'm looking to see how bad it is and comparing it. But something came out and slapped me today, and that is the distance above the moving average where the Russell is sitting. And I went back a long ways, and I don't think I could find another period of time going back 10, 15 years where the Russell was so far above its moving average on the weekly pattern. We are extended, and I think we're short-term extended dangerously, and hence why I put some puts on today. And again, I'm going to build the story of it. Maybe it's time for a little bit of caution. I hope I'm wrong. My long-term portfolio is still long. My short-term portfolio, I got a lot of protection today. I haven't gone short, but if I was sitting on some winnings, I either sold them or protected them. Things I'll talk about on the mentoring session. You could see that the Russell gave us a pretty clear-cut shooting start today. That is not a bullish candle. Big gap up, again, continuing the enthusiasm from Davos. Traded higher, and then you probably noticed your counts came off their highs because in the Russell closed where it opened. That is an indecision bar at the best. It is a bearish bar at the worst. And, we could have some short-term pullback here. Do I think this market is going to collapse? No, but I'm an options trader. And a lot of my things only have a couple weeks left. And if we were to go into a couple week pullback, I'd lose all my profits. So I either protected them with puts, and since volatility is still okay, I was able to sell calls against the position to buy the put, or I out and out close the position. I also know my history. Last year was awesome. January last year was awesome. February sucked. We had a pullback. I've talked about all week that the seasonality suggests we run up a little bit more, and then we probably pull back to the middle of February. Well, I'm getting to that point now where I want to protect. That's not the main reason why I bailed. But let's go and let's look at, again, the major indices. And I didn't bail, I just protected. The Qs, is this bullish or bearish? Well, you probably argue both ways. You would probably draw a trend line there, maybe draw one a little tighter. We are still in a, well, best case scenario, a wedge here. But we're off our highs. And unlike the others, we haven't seen a new high in quite some time. So are we in this range bound area and not, or are we going to break out? Are we going to break down? My guess is we continue to go sideways while we work through this overboughtness. The Qs, because they're off their highs, are perhaps the least worrisome to me right now. And again, as I've said before, we've got lots of support. We got the 100-day, which has been support. We got the 200-day. And right now, we've also got the 50 underneath, but that hasn't worked so well of late. If we look at that's the Qs. We look at the diamonds. We looked at the spiders, didn't we? Pretty certain we did. Oh, my bad again. Yeah, the spiders similarly have bounced back nicely, have not regained their highs, but they are only about 6-8 days from from all-time highs. And again, they've got the 21-day and the 17-day underneath, the 50, the 100, and the 200. So does this look like it's done? No. It's kind of a little choppy now, and I think that's might be what we see. The diamonds, no, this looks great. I mean, wow. Straight line up, relatively tight, just off or at all-time highs trading, close off all-time highs, super, super strong. I would not be bearish if that's all that I saw. And then the Russell, sometimes you're too good. And notice the high jump on the Russell. It's at 100. That tells me that this is the most extended that it's been in the last year. Now we got to an equal point back here in September, and we had a little bit of a pullback. This doesn't have to be a bear market, but we might get a short pullback here. I'll show you more evidence to support that. Now, volatility, as I talked about over the weekend, I hate to admit it. Oh, I did it again. Hold on a second. Someday I'll learn how to use all these drawing tools. I can't use them on any program. Mine's not special. I don't have patience. But we draw a line here, and I commented, why do we have an uptrend on the VIX? False breakout here, it came right back down to the trend line. Neutral is down here. We are not at neutral. We are still, to me, the VIX is a little bit elevated, and I have concerns. Not because the VIX is elevated, because of what I'm going to show you on breadth as we keep moving forward. And then the dollar isn't doing anything. It's just consolidating here. It had a bad day today. And as you can see, it's well off the highs from just a year ago. So dollar's not an issue to me. Commodities are unbelievable. Unbelievable. Gold, all-time high. Will this thing ever slow down? Yeah. One day we're going to wake up and we're going to have a candle that opens here and closes down here. But I don't know when. These are notorious for having brisk pullbacks, what we saw here. But right now, the fundamentals and a lot of analysts think gold is going higher. It could go higher significantly. You got to be careful. I would be taking profits along the way and have stops. You can always get back in. Silver, unbelievable. Again, another positive day for both of them. This one was up 3.76 today, and gold was up 1.87. So both of these are at all-time highs. And It's a wow. And silver is necessary for some of the components of data centers. So it's not just a precious metal, it's important for the industrial use. Oil just struggling here and really gets false breakouts and comes right back. Oil, oil's at best sideways. Natural gas, how many times is it going to do this? It runs up to that 200 and it reverses. Sometimes it'll punch through, but we've seen this before and it just did it again, reversed at the 200. We'll see if that was just one day profit taking and maybe it still goes higher, but that was not a surprise. 10-year gapped up on Tuesday. We didn't have a Monday trading this week. And then it pulled back the last 2 days, but still above where it ended last week and down a bit on the day today. And the 30-year, also similar, gapped up on Tuesday, and then both Wednesday and Thursday pulled back. So that looks better. So I haven't really given you the big problem yet, have I? Let's keep going. My buckets. I'll tell you on the buckets, 14% of the Russell are above their Bollinger Bands, 11% of the NASDAQ by themselves, not enough to get me nervous, but telling me that at least those parts of the market are getting a little bit extended at the short term. You don't know what the buckets are? Come see me on the 31st. Market breadth. The NYSE, did we get to an all-time trading high today? The highest was 22,885.69 versus 22,878. So I think we hit an all-time trading high today. And from a closing high, we're probably close. 22,797. Really? 22,721? Nah, it can't be. It's 22 here on the close is 22,797. The close here was 22,808. So we're right off all-time closing highs. Why am I nervous? Well, I don't know if they'll let me put a high jump on this thing. Let's see. Some of the pre-formatted, I can't add my indicators to, but let's just take a look at that. High jump. It's so long since I've added a high jump to anything because it's built in. It's got to be down here somewhere. All right, let me go slow. We got a lot of indicators that we've added. It's right in front of me. HJ. Let's see if it'll add. It did. All right, I'm just kind of curious. What's the NYSE today? It's only 89.96, so it's not as extended as the others, but it was probably closer to 100 here within the last couple of bars. So do we go sideways and work out the overboughtness, or do we pull back? We're getting extended. The stocks above the major moving averages are at a point, not totally where we're crazy extended. And this was coming off of a bottom, so the short term really moved. But if you look at that white, which is stocks above the 50, we're getting up to a range where markets will top. So I think we're getting right on the stocks above the moving averages. Look at this new high, new low. It's amazing how strong it is, and we'll kill this right now, so let's take that away. The new high, new low is super strong on both the NASDAQ and the NYSE. AD line's positive, up-down volume is positive. And if we look here, there's no new signals. And we did have Hindenburg-Omen signals on the NASDAQ a couple days ago and on the NYSE, but as of right now, they're not confirmed. So you can see here the stocks above the moving averages are getting high on the NASDAQ, and unlike the NYSE and more like the Qs, the NASDAQ is sort of more in the middle of their range. All right, I haven't convinced you yet. I know that. So let's look at this one. Here's the piece that I have found to be short-term the best predictor, and that's the 13-week or 13-period new high, new low. And when it gets above 90, it's almost clockwork. So the S&P 500 is 94. The S&P 1500 is 97. We are at reversal part. Now again, it doesn't have to be a brisk sell-off It can be some sideways digestion. The NASDAQ, which sold off, is only at 88. And then the Russell is at 99. So, guys, they don't get any higher. Those are clear cut, as guaranteed as I have, that I would expect if it's not tomorrow, then we're going to have something happen next week. It can be just a mild pullback. It doesn't require a crash, but it's hard for me to believe that we're going to get progressively higher without working off some of that short-term overbought. Again, hence why I bought some insurance today. Okay, I'm working on a couple of new things. I'm not going to show you that right now. If we look at the ratio charts, you can see materials, energy, staples. Oops, sorry about that, Mr. Technology. Let's fix that by just resetting the chart. Technology, okay, is come on back. I'm going to have to turn it off and on, which I'm not going to do. But the leadership has been the staples, the energy, materials, industrials continue to look good. Let's go and look at the sectors real quick and see if there's any changes today, anything that makes me happy or sad. Imagine if the U.S. markets start behaving like Bitcoin. Pretty big sell-off. That would be painful. So these are ratio charts versus the spider, and we'll just go through these very quickly. Technology doing nothing. Nothing tells me I need to be adding to technology right now. Discretionary holding up relatively well. It's in a buy. Well, it's not in a buy because it's a daily chart. The daily bond goes red, but it's pulling back in an uptrend that looks better than technology. Communications trying to get back. I think Meta didn't hurt it today. Google's doing well. Industrials have been super strong. Financials, it's interesting. The regional banks were doing well. Some of the big banks have blown up after earnings. And today we saw some weakness, or the last couple of days, on the regional banks as well. So I like financials, but right now I don't want to be buying them yet. This is the strength so far. This is energy. So despite the fact that oil is questionable, we see a nice uptrend in energy. Here is materials, very involved in the data center build out, as well as the precious metals. You could see a big move here, super strong. Real estate gave us a nice little breakout here. We'll see if it can hold above the moving averages. Utilities looks like it's turning down, but it hasn't given up the buy signal yet. Staples strong, I mentioned that before from the other ratio charts. And then this is healthcare. And healthcare pulled back, but I suspect with biotech strong and the nice move on Intuitive Surgical, maybe we'll see a further rally in this tomorrow. So healthcare is looking better. And there's your Bitcoin again. So I like to look at those each night just to see if there's been a major change. I could just look at it from the 10,000-foot view and say none of them changed their buy-sell signal. And then I like to always look at those mags and a few of the interesting sectors or themes. So let's very quickly go through the mags because I think there were some changes today. Amazon's trying to get back into favor. I'd like to see it above the moving averages. I do have a position in that. Apple, had a couple of white days, which means they were up, but they're solid, which means they closed lower than they opened. Still struggling, still falling knife as far as I'm concerned. Google has been the leader of the pack. I still like it up here. I have a position in Google. Meta had a massive move today. This may be the beginning of something. So I'm going to put Meta on my radar and see what follow through we have. Netflix, no bueno, as John would say, continues to fall hard. It's stuck in a arbitrage story and a takeover fight with Paramount over Warner Brothers. I don't like participating in those. Tesla, we talked about it, said it's probably going higher and probably go back to all-time highs. And it's always got Elon Musk You're going to see it do well, and it's actually turned into give a new buy signal today. So entering Tesla or one of the Tesla leveraged ETFs might be reasonable here, especially if the market holds up on Friday. And NVIDIA, which I think is really biding its time until it gets earnings, I still think NVIDIA is the big winner in AI. Really didn't do much today. Gap back up, but sitting right on the 30-period WMA, biding its time. And then my friend Microsoft, I actually bought some today. I can't help myself. Um, I literally have 6 computers at my fingertips right here. What do they all have on it? Microsoft Windows, Microsoft Office, Microsoft Teams. What do I have at work? Microsoft. I don't think this company's going anywhere. And at some point, it starts to look interesting. I like the gap up today. I have a leash that's really tight, chokehold. I won't put up with much of a pullback, and this may be just a one-day wonder. Gosh, I wish I never sold any biotech, but every time I say that, that's the end. So I take profits along the way. So I still got maybe 1,500 shares of Labu left. I had a lot more, but LABU is a leveraged 3X biotech, and it's on fire. In fact, did it just break out of congestion? Don't know. It's probably getting extended, and I don't know, just like gold or silver, the day it's going to collapse, which is why I like to take profits along the way. No one says I can't have rebought some here either. What else? Pharma, strong as well. Kind of broke out here of a flag. There's a lot of noise in Washington about controlling drug prices, and that's something that I think looms over both biotech and pharma. But they've been talking about it for 20 years, and they still go higher in price every year. It will happen eventually. Data centers has been really where I put most of my positions are right now, or many of my positions have some tie. Look, someone's got to build them. They need cement. They need all kinds of copper and other optical wiring. They need nuclear or some other energy source. They need chips. They need memory. They need storage. And all these things live in the data center ETF. And we drew this line on the breakout. We talked about it. It's had a nice little run. Now, defensive and ITA surprised me here. And I don't know if it's done going higher. It's done this before. I actually put, as I mentioned on the Metastock video, I think that I put puts on HWM. I just wanted to lock in the win. So I put a put on it. I sold a call close to the money when it was a little bit higher than it is right now to pay for the put. And we'll see what happens. I can always buy back the call. I could always sell the put and keep the stock and keep what drops. I have a lot of options, and I don't mean the kind you buy. I have a lot of alternative things that I can do. So ITA will be watching that one closely, and that's it. So now I've done a pretty extensive review of the market, longer than normal, because I wanted to make the case of why you should be a little bit concerned here. And if you get there in time tomorrow and it doesn't sell off at the open, heed these 13-week new high, new lows, and maybe take a little bit off the top and give yourself a little bit of cash. Or the alternative is buy a put at the money and sell a call out of the money. Give yourself a little bit of upside. And boy, if the stock drops, you're going to be so happy because you're going to make money on the put and on the short call. That's why I do that. Let's go to the layout. Just look at the stock. We talked about two last night. CVS was one of the ones I suggested. And I like the setup. I'll take a look at it here. We drew the lines here. I thought it was breaking out. And you could see today, make sure that's the 22nd, that we did break out here. Not a big move. It was up 1.46%. But I thought CVS, which was a double momentum in a squeeze with good relative strength in OBV, was one of my favorite setups last night. And the other one, and I did buy more CVS, was United Healthcare, which also seems to be breaking out after a prolonged base. You know what they say about the long bases? The longer the base, the greater the space. So these things have been out of favor, probably have turned now into value stocks, and I think they're worth looking at. So a couple different things that we can do is we could go into the top-down section. Right now we're looking at the base list of stocks, which is about 3,700 today. This is the various sector performance, not in the S&P 500 or the S&P 1500, but in the entire data set. Now I'm going to do something a little funny tonight. I got the feeling today that maybe we're going to rotate back into the larger cap stocks. So maybe I don't want to look at 3,700 stocks. So I could change my look-see to the S&P. How about the Russell 1000, the largest 1,000 stocks in the markets? All right, so now you can see it's only 995. Each of those are put into a sector, so less broad, and the leadership is technology, communications, and basic materials. Then I'm going to go over here and realize that these three sectors created these industry groups, and I'm going to rank them by percent down. Take the top 10, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And then I have 146 stocks from the 10 industry groups in the top three sectors using the Russell 1000. Now I'm going to put a filter on price and volume, $5 and 500,000 shares, and I'm left with 131. So if I wanted to go top down and look at just the stocks in the leading industry groups and the leading sectors, I just identified them. Now I can rank them by percentage change. We'll just look at the top couple in each of the searches. GitLab, certainly a bottom fishing choice. And it's not something that I'm against doing from time to time. Really took out a lot of those tops. Relative strength and OBV turned up. This actually looks interesting. Now, normally I expect it to pull back, and I'd like to buy that second move. So I probably wouldn't buy this because it's so beaten up, but that looks interesting. ASTS, space has been popular. It had a little correction on Wednesday and was down 7%, and then on Thursday it was up 12%. I think this one looks interesting. IRDM, I saw a lot of interest in this today. I might set a buy above that 200 because there's always a chance, just like natural gas, it's going to hit the 200 and turn around. Arista Networks, don't like that candle. Path, kind of not as tight. Datadog, a lot of people are talking about this. And just like GitLab must be in the software space, Datadog has had a massive sell-off. It's turning into a value play. I might come up here and say earnings are February 10th. I open up this bit here, I could see it's going to have 55 cents predicted versus 49. It's not a big growth rate. It's 5 cents or 6 cents on 49, so it's 12% growth. It does typically have nice surprises. Earnings 91 versus 73, that's better growth, and it gets surprises in growth as well. So I don't like to buy things that are down like that, but that one looks interesting. I could also go over here and read the news. Datadog moves higher after upgrade to buy, so I might want to click on that puppy, and it'll bring up the news story. It doesn't matter if you subscribe or not. You'll be able to read part of the story. And then I could go down. MDB is another one in the software space, I believe. And this one pulled back to the 50. It's got a CPR and a momentum buy, relative strength and OBV. That looks very interesting right here. Look what happened the last time it sat on the 50 and the time before that. Ian, my favorite mentor of all my mentors, used to call that free parking. And if you think about your days with playing Monopoly, free parking was a good place to land. All right, another way is to look at who had the most positive impulses. My impulses are gaps, volume, breakout, and momentum. So Meta, we looked at that before. Is it ready to buy? Eh, I'd rather buy it above the 200, but it's now on my radar. We already looked at this. This is when we said maybe I'd think about it at the 200. We already looked at GitLab. We looked at Datadog, Arista Network. We'll just look at Zoom. I remember when this was a very expensive stock. I use Zoom every day, but now it seems more of a commodity. It's kind of going sideways. Another thing we could do is taken, say, 5-day momentum, where you could have picked 2-day or 13-day and rank them. And we got CACI. Oh, that looks interesting. I mean, is it getting extended? It's kind of too extended. I might wait for a pullback. There's Meta. Royal Gold. We know this is going to look great, but obviously it's extended. You just don't want to be the last one to get off. Western Digital, one of the data storages. Wow. Now you can look at something like this, and they're expecting $1.93 versus $1.77, so 22 cents. That's about 15% growth. That's not that excited, but again, it does surprises. I've been through booms and busts on the Western Digitals, the Seagates, the Microns, and what kills them is when supply catches up and when the prices get high enough on the commodities or on the goods, more people start making them and then the price comes down. All I hear on TV, in the radio, and read is that there are massive shortages and they're not going anywhere. That could propel these things much higher. So there's a number of ways to look from a top-down perspective. And again, today I picked the Russell 1000. Now, something else I like to do, and this is a new feature that if you haven't watched in the last couple of days, you wouldn't have seen, is typically we look at stocks. Let's take out all the filters. Typically I look at stocks, but I can look at ETFs and watch what I can do with those ETFs. So I'm going to switch to ETFs, and let's put a price and volume on these and get rid of most of them. So I don't care about them unless they have volume. And let's look price over $5. That takes us down to 630 from 3,800. Let's find data center, DTCR. Let's say I was interested still in data center. I think data center right now looks to me like it's congesting or digesting, so I might not be running after it. But I want to know what's in data center. I go up here and I click this. And let's click it one more time and give it a second to do its thing. And it's going to pull up the stocks that are current components in data center. So if I was interested in data center now, I can load them up and go through them one at a time and see if anything looks like I should be buying it. How cool is that? Show you another cool thing that we put in. Let's say you're in the impulse list, which is the main list I do my work on. Let's take out those filters. We got to get out of the ETF, so I'll hit my base. And let's say right now you really like CVS. So let's find CVS. There we go. Remember we talked about this one and it broke out. Now I'm going to click that same little divider thing. And let's re-click CVS again so we can clear what's in here now. So it may take, there we go. So now it's not telling me the components of CVS, but it's giving me a list of stocks that are related. So Bristol Myers is a drug company. Cigna is an insurance company. CVS has a pharmacy, a specialty pharmacy, a PBM, and it's a payer. Core is Cencora, one of the large distributors, which these things run when the markets are bad. Elevance is another insurer. GSK is another pharma. HCA owns hospitals. Humana is another insurer. McKesson is another distributor. Medtronic is a device manufacturer. And Vertex is a biotech company that's done a lot of good things for patients. So If you want to know what runs in the same wolf pack or the same family, different industry groups, but similar story, you just highlight something. What is this one? I don't know what CVRX is. Well, I could tell from here it is also in the biotech space, I suspect. Um, that's a new feature we did. I think that's pretty cool. And then just to finish, on the bottoms up perspective, I like to look at my two favorite scans, A plus, which requires a double momentum. Look at how many we had. I also have the A scan, which looks at stocks that are setting up in a squeeze with momentum or breakout. These are the stocks that hit both, so let's look at them very quickly. AES is a utility going sideways. The relative strength is breaking out. This thing might be ready to run. Earnings are not to February 27th. It pays a 5-something dividend, 5.32, 68 cents versus 54. 14 into 54 is about 25% growth. That might be interesting. Next one is BBAR, which I think is a bank. Big gap up, sideways move. CNXC. If I don't know what it is, I just put my needle over it, my pointer. Technology infused customer experience solutions worldwide. Analytics, business transformation, Fremont, California. Okay, it's below the 200. GameStop is only up because the CEO bought a crap load of stock today. It's still a meme stock and a dog. CalVista Pharma. Lifetime Holdings, I like this one breaking out. Look at the seasonality in here, strong for a while. Mankind is a biotech. We saw it last night. PANL, big breakout today. Low cost stock. Earnings are out in March. 18 cents coming in versus 16. That's not that exciting. What did the newsman say? Shipping state of the industry. They talked about Star Bulk yesterday. Mike Ryan on IBD Live. So maybe we should be looking at shippers. Don't know. Just looking at what the signals say. RGNX, pharma, biotech, nice uptrend breaking out, relatively modest price stock getting extended. SLDB, another biotech stock breaking out. TBBK, regional bank, and then UGI, utility. Don't like how it finished. I guess all of them. I probably like AES the best. I'm not buying tomorrow unless I wake up and I feel like the market's figured out how to get rid of the overbought conditions. I've been watching that 13-week new high, new low for 20 years. And when it gets to the top of the range, the market doesn't keep going up. It either pauses or pulls back. If you're pulling back and you get to the bottom of the range, it's buy, buy, buy. Why did I make my buy call on April 7th at the bottom of the market and feel comfortable putting it out on YouTube? Because we got down to about zero on the 13-week new high, new low. And whenever that happens, the market goes higher. Well, folks, when you're at 97, 94, 99, the market's going lower. It doesn't have to break down. It's probably going to trade sideways and chop, maybe with a downward trend. So I'm not saying it's destroyed. The market's going to hell in a handbasket. I just think it's time for a pause. And for me, as I thought about what's best to do about my portfolio, it was simple. Buy some puts. Have a great day tomorrow. I'll see you over the weekend.